Hello, welcome everyone. All right, so thank you for joining me. Yesterday's video we talked about the LABU. So let's talk LABU right now. What did we see? I mentioned a few things that we were doing in the room and what these indicators that we've created do for us. This is the 3-time leveraged ETF on biotech. First and foremost, in our weekly thoughts and observations, we had provided information that suggests that from the August to September time periods, that's the strong period for drug stocks and some biotech. So we were more interested in taking this breakout above 41.14. And as you can see, it's hard to see it, but it's right into this zone, that little sell signal there. This again is Thinkorswim. These are my PPS indicators. These are the momentum buy and sell indicators. So here we had a breakout. We saw a breakout right here, and the relative strength PMC had turned positive, so that's all good. The first objective, we kind of hit that, and now this was the major objective which we've reached. And so I just wanted to provide you a nice little trade to the upside on LABU. So we hit that objective with this sell signal here. You may want to have exited that trade. Do we go up much? Well, this is a 15-minute short-term trade, friends. Now, here's what I would look for. We were looking for a short-term recovery, and I believe the recovery for the short term was met. Look at this old low. Look where we kind of stopped the market, and it's hidden. You can't really see it, but there's a weekly pivot point there. The person's pivot right up against that line in the sand. And let's go to a 60-minute chart. So in the 60-minute chart, let's remove all of these clear drawing sets, get rid of the trend lines, and you can see an old support which turned into resistance here. Here's an old pivot, and where do we stop? Dead in a dime. All right, nice profit target. So looking at the 1-hour chart, buy signal, and the market is in an uptrend. Does it continue? What's next? This was a nice trade. But no one just gets into LABU for a couple dollar trade. This is a monster of an ETF. When it wants to rock and roll, it can really move. Think about it. If it just was a week ago, we were trading at 49, and it dropped to just right under 38. That's a big move for any stock. Can you imagine that in just that short period of time? So LABU, 3-time leveraged ETF, is not for the squeamish. You have to be timing this right. And I think our indicators help investors do that. So now what do we see? Well, if we can generate a daily buy signal, I think number one, we don't have that little buy arrow. We don't have a buy arrow like this guy right there under the market. So I'll let you know about that. But I think over the next couple days, maybe it's next week, we chop around and we look for a continuation in LABU. Let's move on to the next trade, right? All right. Let's put this back where she belongs. In the S&Ps, a couple interesting spots that I wanted to bring to your attention. I know a lot of people use Fibonacci. I don't use Fibonacci as much as, I don't know, most technicians, and one of the reasons I find them redundant and less effective, don't get me wrong, I didn't say it's invalid, but they're less effective than, truthfully, pivot analysis. And pivot analysis gives us support and resistance targets based on time, and tells us not just the resistance targets based on time, but give us multiple times that we can choose from. And currently, I mean, if we just took a drawing tool here and we use the Fibonacci, let's go with the retracement tool. So from the way the high was set right up in here, so the market had a decline, and then it rallied, and so this depends on if you want to go with the high or reaction high. So 10 to 1 or the other. But if you go with the reaction high kind of method and you draw it down to the low, you'll notice we're at a 618 retracement. What a coincidence. We're at person's pivot resistance too. So we are at a dual confluence of short-term resistance in person's pivot tool. Let's go up here to drawings. Let's remove. There we go. Here's the red line in the sand. That is our pivot resistance. So we've got a confluence of, now, do we blow through here? Well, a couple things that I would point out to you. I use the McClellan oscillator and we have a modified one that we created in TradeStation, what is the McClellan oscillator? It is a tool created by Sherman McClellan, which takes a moving average as an oscillator of the advancers versus the decliners. Now, the issue here with the McClellan oscillator, while it's a good indicator to use overbought, oversold conditions of the equity market, it uses data from the New York Stock Exchange Composite Index. And we created one using that formula, but apply it towards the data from the S&P 500. We also created one for the NASDAQ 100. We created one for the Dow, which is 30 stocks, and one, of course, for the Russell. That makes sense, right? Why would I use an indicator that's designed using data off a index that has got completely different weights and effects of weightings of different stocks, such as the NYSE is mostly 65% of that index is weighted towards interest rates. It's interest rate sensitive, utilities, bond funds, REITs, etc. When we're trading small cap growth or Qs with technology with biotech weighting toward it, or the S&Ps with a heavier weight of maybe financial and energy and technology. So you could see the point, that logic that I'm trying to instill. But it's still a pretty valid tool overall that suggested the other day we were extremely oversold. That's what we wrote about. That's what we talked about in the last video. And now, on a day-to-day basis, we went from one extreme to the other. But we went to a major extreme reading, but we're not at an extreme high. So this may be the stopping point for right now in the market. And the question begs, is this a dead cat bounce, or are we going to find possibly new life and new momentum into the market, new money flows that take the S&Ps not just back to where they were, but to newer highs? I don't have that information yet. We have to see and wait till the end of the day. More importantly, we need to wait for the end of the week. So let's take a look at the weekly chart. We went into a weekly sell signal. Now, it's not uncommon to see the market bounce right back up. And the moving averages, as you can see, my moving averages on Thinkorswim are up here around 296. So this kind of moving here, we are the McClellan oscillator on the SPY, the weekly basis, man, this is the weekly reading, right? And it had what we call a zero line, and it is not oversold and it's not overbought. It's kind of in fair gray territory. So I will have better information, I hate to say it, of what to do next for this market. What's the next big play? Is it selling this recovery rally, or is it looking to buy the dip? I'll get that information to you Monday when we get the final figures for the end of the week. I hope that makes sense. In the meantime, what are we doing in the marketplace here? Well, I'm not a big fan of buying into resistance, so I would say let's stay on the sidelines for right now at this point. All right, what do you mean stay on the sidelines? The person, you're in trades. Yes, we're long still Bristol Myers. I just sent an email alert out that I want to be long on Occidental Petroleum. So I just said I would initiate a brand new trade. I think it's best to get a little bit more information. We could go a little bit higher, but I don't have enough information to establish a brand new trade here. You heard my videos yesterday. We talked about market being oversold, upside potential. Now what do you do? This was a big move today. Look, we're up almost 1.7% in the S&P 500. That's a good day, and we had a great day. So we made money with the LABU analysis. We told you about TBT. We timed that perfectly to do that vertical call spread, the 24 long strike versus selling the 26. And LABU and TBT worked out very well to our advantage. Now let's talk about energy. So maximize sell here. This is Occidental Petroleum. Why am I stalking this like a crazed monkey looking for a banana in a zoo? Well, here's why. Because it has a lot of potential. Look at this. This is the one that has the worst relative strength performance in all energy stocks. It's been in a kind of a tussle between Carl Icahn, who has been out of shape as a major investor. They borrowed money, gave Warren Buffett a great deal on warrants or a stock swap deal. It pays out 8% plus. So that's why this is kind of like, you know, flustering a lot of investors. But the way I see it, and if we go up here, and I just wanted to make sure we share this with you, because this could be a very big trade down here. Let's go to time frame setup. I'm going to go to time frame. I want to change this to 20 years, and I want to change this to a monthly chart and hit OK. Maybe I shared this with you before. I'm not sure if in prior videos, but I want to make sure I reflect this analysis today again. We have not seen prices, and I'm drawing two lines off of what was a person's classic setup. This is a last conditional change candle. Something, as you know, last conditional change, wrote in that book 15 years ago. And that's the title of that book, Candlesticks and Pivot Points. I'm the guy who put the two together, and I've worked with a lot of great educators. A lot of people said, hey, that's a great combination. I'm the one that introduced that. And it really is a very, very powerful combination to look at candlesticks as well as pivot analysis. Many of you may not even know this, but a good friend, an old friend in the field of technical analysis, Steve Nissen, who came up with the really popularized candlestick. Steve and I actually created an indicator with his engulfing pattern criterias and my pivots, and the NPI, the Nissen person, it was done alphabetically, Nissen person indicator, and it's found on Genesis. Still to this day, they still have that indicator. Fabulous stuff. And Steve, if you're listening, I hope you and Bonnie are well. All right. Now, let's take a look here at what I see. Why am I picking and catching a falling knife? No, because here is a situation. I want to be buying into this like literally 15-year support against these lows. The market broke out, came back, launched. Market once, twice, three times. There's a lot of buying from way back from 2006 and again in 2008. What is the current condition of the market? Well, if you'll notice here, the price of the action here in this particular low is now we see price is lower than there, but the volume is certainly not at the same level. That's suggesting that this may be just simply a squeeze play. Someone's bought long, they've got a margin issue, and they're liquidating. So I think this is a way to play this. Either look for a call option, but we may linger for a little while for the next 6 weeks, or stock traders scale in lightly. And what I'm looking for, when I say scale in lightly, what I'm looking for is I think that we may try to tap that low one more time. So I want to be buying against that low on, say, if you're going to throw in capital, whatever that number is, take half of what you want to pay and put an order in to buy at around 44.80 or so. And then I want to try to buy against that real longer term support. So in essence, I'm scaling in using super duper long term support, which is not catching the falling knife. There's going to be support there. And the condition of this current decline is on less volume than people think. Now, this is kind of a strange anomaly. When the price went down, you'll notice that the on-balance volume has trended lower. But from way back over here, look at the relationship of where prices are, and this is the one item that I like to teach traders, and this is going to be very helpful for you. You compare what I call the apple to the apple. What was the swing low in the price, and what was the corresponding low of the indicator? And where is current prices, and where is current volume at the same comparison? You'll notice that from way back over here, when price was at around 51, now we're trading at around 46. Where's the volume? A lot higher. So even the volume over time is suggesting that this is a very weak volume sell-off, which means it's vulnerable for spikes to the upside. So that's what I am looking at and why I'm stalking Occidental Petroleum, just to give that analysis to you firsthand. So let's go over here and clear the drawing set, get rid of these lines in the sand. We might not even get down to that level. What makes me suspect we could? Generally, markets that don't like snap back super fast, and here's one that did, HES. This was one that was on a radar screen for buying this week. We missed this bid by 28 cents. So just to let you know, we're not perfect. The relative strength started to go fuchsia, which means it's improving. And then with a buy signal, this was a great little trade to the upside. So relative to Hess here, or relative to Occidental, Hess improved and broke out. Oxy hasn't. So it tells me maybe it's got one more, Occidental has one more dip to the downside. And that dip, if the conditions are met, we should be looking to be a buyer there and scale in. And then if by chance it doesn't get down to those numbers, look to maybe chase the trade up a bit, because after all, if you look at Occidental OXY, man, it's got a long way to recover. And I think this is not just a good short-term trade going into this September time period where we have hurricane threats in the Gulf, we get refinery platforms shut down, oil producers. This is a trade that I think has substantial upside potential in the next 12 to 16 months. I'm not saying we're going back up to the highs of absolute 86, but I'm certainly thinking we can get back up into at least $68, and a very good trade against super long-term support. Thank you for watching, and as we get other trade ideas, we will help you with them. Again, 50% retrace or 618 retrace corresponds with the pivot resistance in the spider. GE, we took a protection on rolling out of a deep in the money put option. We took profits on that and rolled down into an out of the money put against a long stock. Just a perfect way of playing it. Wells Fargo, a little bit of long exposure. We had a breakout here. One of the things, this is that last conditional change concept, something that each and every one of you as a trader should learn about, my last conditional change concept. Other than that, we have a nice trade breakout in Bristol Myers, and the entire pot sector is going up in smoke. What do I mean? Afria reported strong earnings last week. I'm thinking that as long as Tilray can manage to maintain staying above its weekly pivot, and the daily pivots are above weekly. How do we know? Because I've color-coded it. Daily pivots are pink and weekly pivots blue. Your first clue, and one that I wrote about in this book, is when do you get a confirmed buy signal and a trend reversal? When 1 week pivot gets above a prior week's pivot. So we're still in a negative trend. Here's a pivot, the blue line. And by the way, in true bearish markets, the weekly pivot, the blue line, acts as resistance. Here's another example. Weekly pivot, it's below the prior week. Weekly pivot, below the prior week. But this week's pivot is not not a rate of change, and the depth of change is not great. So it's starting to show that there's some stabilization here in Tilray, and if we get next week or by Friday, we get these targeted pivots to project a higher value, it shows that there's a price reversal. Thanks for watching. We've got a lot of tips and tricks on things that we've learned through our 38-year history. A lot of stuff in that book, which is why that was such at least a lot of the ideas in there have been copied, especially the high and low close doji. There's so many people out there that now use that formula, except for they forget where they learned it from. But neither here nor there. You should apply and read the book and read what's in that book, because the material to this day still helps to develop phenomenal trading strategies. Thanks again. Have a great rest of your trading week, and I look forward for the next update, and we'll see what happens with Occidental. Take care.